Okay. Emma and Noah are in a partnership sharing profits and losses in the ratio of 3 to 2. On 30th June 2025, the capital balances were Emma 25,000 kwacha credit side, Noah 15,000 kwacha credit side. On 1st July 2025, they admitted Liam as a new partner. The new is as follows. Liam introduces cash $10,000, equipment $8,000. The new profit sharing ratio Emma 5 over 10, Noah 3 over 10, Liam 2 over 10. Goodwill valuation 12,000 kwacha. Goodwill is to be adjusted through the capital accounts but not maintained in the books. So it means we need to write off the goodwill, right? Then assets and liabilities to be revalued. We've got this information here. Then we have the bank loan of 4,700 remains unchanged. Required, prepare the following accounts: the goodwill account, the revaluation account, the partners' capital accounts. In part B, you need to prepare the statement of financial position as at 1st July 2025 after admission. Okay, so colleagues, first things first, we need to work on the goodwill account. So this is back to revision. Colleagues, what is goodwill? What is the definition of goodwill? Mr. Kasono, you are there in that other class. Yes, you can open up the class. What is the definition of goodwill? Good evening. How was the long weekend? Oh, I was doing serious marketing there. I was going stand to stand giving my flyers. Eh? Come to You can say the value of the company due to its reputation, customer base, location. Okay. Uh-huh. Another way to look at it, it's goodwill can also be future expected profits. Okay. Or the fact, yes, or another way to look at it, the factors that help a business run successfully. And these factors are the same: reputation, brand loyalty, customer base, good location. Okay. Yes. Colleagues, are we all okay with that definition of goodwill? Are we all okay with that? Oh, yeah. So I saw that one on a video a long time when I was looking at this. So I saw it in a video. They said there was one video where they said that future expected profits. Yes. When I was also starting to learn about this goodwill, when I was watching through, I saw one video where they said future expected profits. Okay. Okay, colleagues. So here, goodwill is valued at 12,000. Now we need to open the goodwill account and we need to write it off. Okay. Yes. So colleagues, how do we open this goodwill account? Remember, it's the same thing we did last time. Okay, it's the same thing that was done last time on this part for the goodwill. Okay, I just want to see who remembers. Okay, yes. How do we? What is the first thing we need to do here in terms of goodwill? Mr. Vincent? Sure, I believe I saw you. Okay. Mr. Nchimonia? Yeah, yeah, yeah. Yeah, we we are in trouble today. Ha! Madam Sylvia? Yeah, 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 yeah. Uh-huh. Okay. Colleagues. Mm. Because you are the one. Mhm. Yeah. Okay. We need to open up the yes, so we need to open up the goodwill account, then again close it. Okay. Remember, before this partner came in, all right, whenever a partner is being admitted, first the partners have to get the value of their goodwill. Okay. And then this partner who is coming in, he cannot just enjoy what these other partners have worked out, have worked for. He can't just come and get it for free. Okay. So when you're opening up the goodwill account, this is the first thing you do. Step one. Please remember, because I think this is the last question on partnerships, or maybe did Mr. Romeo say that he's also going to bring for the income statements for partnerships? Was that mentioned also? It wasn't mentioned? Okay, then, okay. All right, to be on the safe side. Okay, all right. Yes, so when you're opening up the goodwill account, first thing, remember goodwill is an asset account. Okay, so it increases with the debit. Okay, so you're going to debit the goodwill account, 12,000. Okay, then you're going to credit the partners, okay, with the old profit sharing ratio. Okay, so the ratio is 3 to 2. Okay, so Emma, okay, remember ratio 3 plus 2, that is 5. So Emma gets 3 over 5 times 12,000. Colleagues, what's 3 over 5 times 12,000? No one came with the calculator. 3 over 5. Okay. 7,200. Okay. This is what's entitled to Emma for the goodwill. Then Noah, 2 over 5 times 12,000. What do we get? 4,800. Any questions, colleagues? This is the goodwill these people are entitled to before the partner enters. Okay, before the partner enters, they admit the new partner. Yeah. Yes, the other time the partners were sharing in the ratio 1 to 1. So they were getting 50-50 each, 50% each, 50%. Yeah, here we're using this ratio. Do not worry, in the questions, they'll always give you the ratios. If they haven't given you the ratio, wait for Mr. Romeo to enter the exam room and you lift your hand and you say, Sir, we don't have the ratios here. Mr. Twamba, what if Mr. Romeo doesn't come in and there are no ratios? What do you do? Oh, Mr. No, 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 no. Remember how I showed you how you calculate the ratios last time? I think it was just me and Mr. Twambo in that class. It was just me and him. And you also. Okay, I'll show you again. Okay. So here on the debit side of the goodwill, you're going to debit it 12,000, okay? But you're going to put the details here, okay? Capitals, Emma, 7,200, Noah, 3,000, 4,800. Then, any questions before we now move to this next step where we write off the goodwill? Okay, let me just help you there, okay? If you want, you can just put this 12,000 here. Okay, you can just put the 12,000 there. But I would advise when you're answering these questions, put the details here. Okay. The then this information is going to the capital accounts. These credit entries are going to the capital accounts. Okay. But on the debit side of the goodwill, all right, also put what each partner is entitled to. Don't just put 12,000 like that. No. Put what each partner is entitled to. Is that okay, Mr. Casson? Mhm. Uh-huh. Mhm. Yes, you're just mixing up. You have got the concept, but you're just mixing up things here. Yes, on the for the write-offs, when we're writing off, we're going to share with the new profit sharing ratios and put the amounts on the credit side. But what you're saying is on the debit side, what did you do again? You just put the and you just put the amount there, the 27,000. Or I never put the names. I never put the names. You confuse people, sir. You're going to confuse people. No, don't worry, sir. Okay, don't worry. Okay, Mr. Kasono. Everything is when you once we're done with this question, you will see everything is just the same. That other question, what I just did differently is I calculated the net gains and losses for the partners before I started doing this. Yes, yes. But do not worry. At least I can see you still remember some things there. So you're on the on a good path there. Yes, the masses should actually appreciate that you are leading them today. Okay, okay. Yes. So, colleagues, that's the first thing you do, okay? Open the Goodwill account, find out how much each partner is entitled to before the other partner enters. Then, step two, you now need to write off the Goodwill account. Okay, this is where we are writing it, writing off the Goodwill. Okay, basically, like we're closing the Goodwill. So, what's going to happen here is we're now going to debit each of the partners, including the new partner, with the new profit sharing ratios. And then we're going to credit the goodwill, the same amount, 12,000. Okay, colleagues? We're now going to debit the partners. Okay? It's earlier on we credited, now we are debiting. Okay? The reason why we're doing this write-off here, colleagues, we just want to find out this new partner, how much is he going to compensate the older partners? Okay? For him to benefit from this company. How much is he going to compensate the older partners? That's what we're just trying to find out here. Okay. So we are going to use now the new profit sharing ratios to debit each partner. So the new profit sharing ratios are these ones here. Excuse me. Okay, so we put like this: debit, credit. So Emma gets 5/10. So 5/10 times 12,000. What is 5/10 times 12,000? 6,000. Then Noah, 3/10 times 12,000. What do we get? 3,600. Then Liam, the new partner, gets 2/10 times 12,000. 2,400. Okay, so we credit goodwill 12,000. So let me just put these entries in the goodwill account, then I show you what is happening here. Okay. So before Liam came in, Emma was entitled to 7,200 of the goodwill. Now Liam has come in, so Emma is losing a 6,000 here. Okay. Emma is giving off a 6,000 here. So we have to find out by her giving a 6,000, how much has she lost from 7,200 down to 6,000? How much has she lost? She's lost a 1,200 here, which she needs to be compensated by Leah. Okay. Initially 7,200, now down to 6,000. So she's lost a 1,200, which needs to be compensated by Leah. Noah also 4,800. Now it's gone down to 3,600 due to Liam joining in. How much has Noah lost out? 48 minus 3,600, 1,200. So 1,200 needs to be compensated to M. And also another 1,200 needs to be compensated to Noah. So Liam, this 2,400 is going to give Emma 1,200 to compensate her for this loss, and he's going to give Noah a 1,200 to compensate him for the loss. Okay, so Liam is compensating these two partners for their loss in goodwill. Okay, 1,200 has to go to Emma, 1,200 to Noah. So in total, Liam has to give them 2,400. Any questions? Yes. Yes. Okay. On the debit side, before Liam came in, Emma was entitled to 7,200 of goodwill. Noah was entitled to 4,800 of the goodwill. That 12,000 kwacha. Now, since Liam has come in, Emma is now entitled to 6,000 kwacha of the goodwill. She's entitled to 7,200. Now she's entitled to 6,000. It means she's made a loss, right? Mhm. This is mhm. Yes, the balances were on the credit side, madam. Yes, 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 because we're writing it off. So as we're writing it off, we need to see how much each partner has to be compensated. Okay, let's start. Before Liam came in, Emma was entitled to 7,200. Noah was entitled to 4,800. Okay. Here, before you start thinking about the debits and credits, let's go with the story that's going on here. Okay. Bo- Emma entitled to 7,200. Noah 4,800. Just hold on. Just hold on. Now, Liam has come in. Okay. And you've seen we've shared the goodwill with the new ratios. So it means with the new ratio, Emma is now entitled to 6,000 kwacha of the goodwill, and Noah is entitled to 3,600. So the amount they're entitled to for the goodwill has dropped. Okay, Emma was 7,200. Now is entitled to 6,000. So there's a drop in the amount she's entitled to for the goodwill. She's made like a loss of 1,200 because Liam has come in. Same with Noah. He was entitled to 4,800. Liam has come in, he's now entitled to 3,600. So from 4,800 to 3,600, he's made a loss of 1,200. So these losses these guys have incurred have to be compensated by the new partner, which is this amount, 2,400. Then the reason now why we are debiting is because we are writing off the goodwill. The goodwill should not appear in our financial statements. That's why it's now being written off, because it shouldn't appear in the financial statements. If it wasn't being written off, it would have just stayed there on the debit side here. If the question says there's no goodwill write off, you just calculate for the partners and the amount stays there. But since we are writing it off, so as we are writing it off, we're saying, okay, how much is each partner getting with the new ratios? And then you find out, when you find out how much each partner is getting with the new ratios, you find out how much they've lost, which needs to be compensated. Any questions? Mhm. Mhm. Okay, Liam, the reason why he needs to compensate them is because he can't enjoy what they worked for. Okay, he can't just come in and just enjoy that goodwill. So he needs to compensate the partners. So whenever you're admitting a new partner and you've been in business for a long time, first you have to find out, okay, what is the value of the goodwill of the company? Once you determine the value of the goodwill of the company, then you find for the existing or the old partners how much they are entitled to. Once you find out how much they're entitled to, you're going to admit in the new partner, and then you're going to share that goodwill with the new ratios there. And once you share with the new good ratio, with the new ratios, you see, okay, each partner's new entitlement of the goodwill. Then what you're going to notice is for old partners, since the entitlement has dropped, so they need to be compensated for that drop in their goodwill. Mr. Kasono, your hand is still raised. Okay, sure. Okay. These tabulations. Yeah. Hmm. Also, yeah, also talking about that table which I put last time. Oh, okay, yes. As I said, that table, it simplifies this calculation. Maybe should I put that table back? This is okay. Yes, yes. Usually, when you're answering these questions, you do it like this. As I said in that other class, I said that table it won't be necessary. Okay, this is the way you must do it. But maybe I can put the table so that maybe it illustrates better. Colleagues, should I put the table back? Maybe. Mhm. Yes, that's yes. Okay. Okay. Let me just put the table for everyone to see. But colleagues, remember this table, you don't need to put it in your tabulate in your thing, in your calculations. Okay. So before partner is admitted, goodwill is 12,000. Okay. Then remember with these we use the old profit sharing ratios. Emma 3 over 5, Noah 2 over 5. Okay. So Emma gets 7,200. Noah gets 4,800. Then, when we admit Leah, new partner, same goodwill 12,000. Emma is entitled to 6,000. Noah 3,600. Liam 2,400. So you compare the accounts. Emma was initially entitled to 7,200. Liam has come in, so she's now entitled to 6,000. So she's made a loss of 7,200 minus 6,000, 1,200. This needs to be compensated to M. Okay. Basically, she's saying, for admitting you, Liam, my goodwill has dropped to 6,000. I've lost the 1,200 for admitting you, so I need to be compensated this 1,200. Then Noah is entitled to 4,800. Now, when Liam comes in, he's entitled to 3,600. So there's also a loss for Noah here, 4,800 minus 3,600, 1,200. So Noah is telling Liam, for admitting you in here, initially I was entitled to 4,800. Now, since you are now in here, I'm entitled to 3,600. So I've lost the 1,200, which you need to compensate me. So Liam, once he gets this share of goodwill, 2,400, he's going to give Emma 1,200, and he's going to give Noah 1,200. Any questions? You remain with zero, basically, yes. This 2,4, okay? This 2,4 has to go to these two people here because they've brought her. They brought. Don't know if Liam is a guy or a girl. So for bringing Liam in, Liam has to compensate these guys because their share of the goodwill has dropped. So that drop of their share needs to be given to them. And when we reach the capital accounts, you're going to see that Liam's capital balance is going to drop by 2,4, meaning is compensating Emma and Noah. Any questions, colleagues? And then the reasons for the debit entry is because we are writing off the goodwill. Okay, you are writing off the goodwill. You do not want in your financial statements goodwill to appear. So you need to write off the goodwill. So that's the first part for the goodwill account. The goodwill account, once you do these entries, it is now closed. 12,000 debit side, 12,000 credit side. So it is now closed. So any other questions before we now go to the revaluation account? In where, sir? Just like, okay, you're talking about, you don't need to add, wait, what are you saying adding, what specifically are you asking which we don't need to add? So, oh, for the debit side, you can put here 12,000, 12,000 here. But it just ends like this because both sides are balanced, so it just cancels out. But in a nutshell, no, there won't be need for you to add, sir. You would have got the ratios, and those ratios should equal the total amount. Okay, so the next part we need to do the revaluation account. Okay, the revaluation account, this is what you need to remember. Credit side is for gains or income. Debit side is for losses or expenses. And here you need also to remember the double entry rules, because this revaluation account is most about the change in value of assets and the liabilities. Okay, so let's begin. So we're going to start with the buildings. Okay, they've told us building increases in value from 40,000 to 46,000. So it means here we have an increase in our building values. Okay, increase in building. We'll just find out by how much has it increased. So you're going to say 46,000 minus 40,000. That is 6,000. So we've got a 6,000 increase in our asset, which is buildings. So colleagues, when there's an increase in an asset, do we debit or we credit? According to the double entry rules, the dead click thing. Let me even bring it here first. Dead click. Yes, when there's an increase in an asset, do you debit or do you credit? Let's see those who remember the double entry rules. Mr. Kasono, increase in an asset, do you debit or do you credit? Mm, 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 mm. You would credit the revaluation account, right? Then we debit the asset. Okay. Remember, assets increase with the debit. Just think of it like this. This is the buildings account. All right. Initially, it is 40,000. So there's been an increase of 6,000. So you need to debit here so that the balance on the building account should be 46,000. Okay. So you debit buildings, 6,000. And as I said, any gains or income, you credit the revaluation account, 6,000. Any questions before we move to the next one? Okay, the next one, inventory decreases from 7,500 to 6,300. So here we have a decrease. By how much? 7.5 minus 6.3. 7.5 minus 6.3, what do we get? Am I still on? Yeah, 7,500 minus 6,300? 1,200. So we have a decrease in the value of our asset. So when an asset decreases, according to these double entry rules here, asset here is on an A. If an asset decreases in value, do we debit or we credit? Because should this come for you in the exam, these double entry rules are the ones that are going to save you. There's another trick, but that one's for memorizing, where you say, okay, increase in an asset, you're crediting valuation. Decrease in an asset, you're debiting valuation. But if you remember it like that, you might forget. But when you remember it according to the double entry rules, it will make life easy for you. So when there's a decrease in an asset, what do we do? Mr. Trevor, Madam Helen, Mr. Vincent, Mr. Chimonia. Mm-mm. When there's a drop in the value of an asset, do we debit the asset or do we credit the asset? Yes. And then any losses or expenses, we debit the revaluation account. Yes. Or for today, what you can do is just remember this one here. Okay. Then as you practice, you you get better with it. So we debit revaluation account 1,200. Then we credit inventory 1,200. Any questions? Okay. Trade receivables include 1,000 bad debts. Original balance 4,000. Colleagues, what are bad debts? Those who have got low. Uh-huh. You can also answer. Yes. Eh, Sinkongole, which is not going to come back. Okay. So bad debts reduces our trade receivables value. Okay. Now instead of debiting bad debts like we usually do, this time we still debit the revaluation account because remember revaluation debit entries account for losses or expenses. Okay. So and then you credit the trade receivables. Reduction in an asset, you credit. Any questions before we move to the next one? Yes, we ignore the 4,000 because we know that this 4,000 is reducing by 1,000. Yes. So if you see even a provision for doubtful debts, you also treat it the same like here. Okay. Provision for doubtful debts is just your estimation of people who might not pay. Some might pay, but it's just an estimation. Okay. Okay. Trade payables reduced from 6,800 to 6,200. So here we have a reduction in a liability. Colleagues, whenever there's a reduction in a liability, what do we do? Do we debit or do we credit? Here are the double entry rules. Liabilities here and here. So if there's a reduction in a liability, do we debit or credit? Yes, 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 we debit. Okay, liabilities increase with credit. So when they're reducing, you debit. So please, colleagues, remember these double entry rules. Should they bring these revaluations for you? Okay, that way you'll be on the safe side. These double entry rules and this here. Credit any gains or income and debit any losses or expenses to the revaluation account. So there is a decrease here by how much? 6,800 minus 6,200. Okay, so 6,800 minus 6,200, we get $600. So we debit trade payables 600 and we credit the revaluation account 600. Then you open up the revaluation account. So our first entry debit buildings credit revaluation 6,000. Then the next one for inventory, we debit revaluation 1,200. Then the next one was for trade receivables with debit revaluation account 1,000. Then the next one, we credit revaluation account 600. So with the revaluation account, you're going to see, are the gains more than the losses? So on our credit side, we have 6,600. On our debit side, we have 2,200. So we've got more gains than losses. All right. So you're not going to put balance carried down here, okay? What you're going to do is this difference here, this 6,000, you put a revaluation surplus on the lower side, revaluation surplus. Then you're going to say 6,600 minus 1,200. What is 6,600 minus 1,200? Or 2,200. I've added this 2 plus 1,000, we get 2,200. So 6,600 minus 2,200, what do we get? Are we there, colleagues? 644, yes, 4,400. So this 4,400, this revaluation surplus, it must be shared amongst the old existing partners, okay, because we are assuming that this took place before this partner, Liam, came in. Okay, so Liam is not going to have a share of this revaluation surplus. Okay, it's only the old partners who are going to have a share of this revaluation surplus. And you're going to share this revaluation surplus with the old profit sharing ratios. I repeat, after you're done with your revaluation account, you're going to see, are the gains more than the losses? If the gains are more than the losses, like in this case, then you go on the debit side and you're going to put here revaluation surplus. Okay, and then you're going to subtract the total gains minus the total losses. Once you've got the revaluation surplus, that surplus is only going to be shared to the old partners. Okay, the new partner is not going to enjoy any of this, and you're going to share this revaluation surplus with the old profit sharing ratios. So Emma, her old ratio before this person came in, Liam came in, her old profit sharing ratio was I think 3 over 5. 3 over 5. So 3 over 5 times 4,400. What do we get? And then also for Liam here, 2 over 5 times 4,400. Oh, no. Yeah. Thank you, madam. No, yes. So 3 over 5 times 4,400. 3 over 5 times 4,400. Yes. 3 over 5 times 4,400. What do we get? 2,000. Okay. Then 2 over 5 times 4,400. 1,760. Yes. So this information is going to go in the capital account. Any questions? If the losses are more than the gains, then you do now the opposite. Okay. The revaluation deficits will still be shared with the partners, but you put this side on the credit side. Then on the capital account, those revaluation losses will be on the debit side. So this is the revaluation account. Okay, there's no balance brought down or balance carried down for this one. Okay. First, you need to find out if there's a revaluation surplus or deficit, and then you share either that surplus or deficit with the old profit sharing ratios. The new partner is not entitled to any of this, so please do not include any new partner. And finally, the capital account. Okay, so here on the credit side, we've got Emma, Noah, and Liam. So we're going to say balances brought down. And we're going to check in the information. We've been given the balances for Emma and Noah. 25,000 Emma, 15,000 Noah. Okay. Okay. Then next, Liam introduced some capital in. All right. Introduce capital. Cash 10,000, equipment 18,000. So we are going to say cash 10,000, equipment 8,000. You can put them anywhere, sir. It doesn't matter, sir. But I see you're paying attention. I like that. Okay. Yeah, goodwill creation. Emma was getting how much? 7,200, and Noah 4,800. Yes. Colleagues, basically I'm following these journal entries, okay? These credit entries are the ones that I'm putting, okay? And then these debit entries, I'm also going to put them um, in the accounts. So Emma 7,200, Noah 4,800. Then we also have the revaluation. Okay. You're going to say Emma 2,640. Okay. Noah 1,760. Yes, those are all the credit entries that need to be done. Then we come on the debit side. Okay, so here we're going to say goodwill write off. Then these entries here, which on the credit side of the goodwill account going to appear on the debit side of the capital account. 6,000. 3, 6, and 2, 4. I don't think there are any other debit entries. Okay, so we get the balances now. So, oops. So Emma, you're going to say 25,000 plus 7,200 plus 2,640. What do we get? 25,000 plus 7,200 plus 2,640. What do we get? 34,840. So we're going to say 34,840 minus 6,000 to get our balance carried down. So 34,840 minus 6,000, what do we get? What's the value again, madam? Okay, 28,840. 28,840. Okay. Yes. So initially, Emma's account was 25,000. All right. When you cancel out this 6,000 minus this 1,200, 7,200, she's getting compensated the 1,200 by Liam. Okay. She lost the 1,200, which Liam is going to compensate. So the net effect is her capital account is also going to increase by 1,200 plus this 2,640 to get this 28,840. Okay. Her capital balance has increased due to the compensation from Liam, 1,200, and this profit from the revaluation, 2,640. So her capital balance has increased. Then we also look at no. His initial capital balance is 15,000, so it's also supposed to increase because Liam is giving him a 1,200, which is being compensated for, and this share of the revaluation is 1,760. So also Noah's account is supposed to increase. So we're going to say 15,000 plus 4,800 plus 1,760. 15 plus 48 plus 1,760. 21,560. So 21,560 minus 3,600. 21,560 minus 3,600. 17,960. Okay, so Noah's capital balance has also increased. Okay, due to the 1,200 compensation from Liam. Okay, and this 1,760. So his balance has increased from 15,000 to 17,960. Okay. Then Liam, 10,000 plus 8,000, 18,000. He's giving out 2,400 to both to Liam and to Emma and Noah. So 18,000 minus 2,400, what do we get? 15,600. So as you can see, it comes in with an 18,000, But since he has to compensate the two other partners, he remained with a 15,600. Yes. Okay. Any questions? Okay.